at this moment, I need a little bit of a drink of water. I think at this moment, if we could get some Fiji up here for all the members, that would be absolutely fantastic. Because right now I'm absolutely parched. I'm watching the S&P 500, the stock market absolutely fall apart. This is the second biggest dropping day I have seen in my last 9 years of trading. We are seeing a 5% drop almost on this day. We have given back an entire week of climbing in the matter of a day. And the big question that a lot of traders are just asking why. And the reason is from this morning's inflation report. This morning's inflation data did not reach our expectations. We were expecting inflation to be able to drop underneath 8%, see 7.9%, go down towards 8%, and we did not reach that. Not hitting those areas made investors scared. And it threw off the entire game plan. Investors were already talking about interest rates coming on up of only 0.25, talking about interest rates coming on up of only 0.5%. Because coming up on September 21st, next Wednesday, Jerome Powell is going to be speaking. And he's going to be telling us how much interest rates are going to be going up even higher. So far this year in 2022, we've had 0.25, 0.5, 0.75, and 0.75. And after we reached what we believe was going to be the peak of inflation back in June of 9.1%, now we thought it was going to keep on dropping and falling. But unfortunately, it hasn't stopped just yet. Now, we are not at 9.1%. We are not back up at those June highs. But the fact is, we are still not fighting inflation, and it's not going down as fast as we thought it would. So, guess what traders are now saying to themselves? Oh, wow. We've been rising this market on up thinking that inflation is basically over with. We've been rising this market and buying and climbing and seeing this market move on up, expecting that we are now going to have 0.5 interest rates, 0.25 interest rates. But it looks like another 0.75 interest rate is coming. So we basically have a few things that we need to ask ourselves, and we have a few things that we need to be able to figure out. And those things that we need to figure out at this moment is number one, the S&P 500, where is the bounce play going to be? And while that bounce play may be safe today, is it going to be safe in 7 days from now when we get over to those interest rate hikes? So at this moment, we could take a look at this S&P 500. And when we look at the S&P 500, we have seen the very clear downtrend on the S&P 500 that has been holding for the past 9 months now. And we could see that every single time we come up to this purple line, we usually get rejected right back on down. And these downtrends, this downtrend right here, of rejection, rejecting, and this uptrend right here of uptrend, have been our clear-cut game plan. This is what we've been calling our jackpot entries, our jackpot short, our jackpot if you want to do a put contract. Then you could do a buy or a call contract, and our last buy or call contract has been working perfectly. But as the market is dropping, as the market's getting lower, as the market is falling, is this going to be able to hold? That's what traders are wondering at this moment. Because you know what? We just got our first dip buy. We just got our first bounce play as we came right down to that purple line. Now let's look. That purple line, if I take a look at it, I would say it's right around that 392.50 mark, 392.50-ish area. And where did we come on down to a low? Low of the day so far has been 392.47. Right off that line, bounce back up to 393.61, and now we're coming back on down towards around 392.50. Traders are going to do the best they can to keep holding up this uptrend of 2022. The uptrend that came when inflation was at its highest point of 9.1%. But is this now going to crack since inflation is still higher than expected? If it does crack, 387.50 is the next area of support. And I think 387.50 is maybe where we're going if the purple line does break. Now, if the purple line breaks and we fall down to 387.50, that's going to be the bottom until we go into interest rates on September 21st. September 21st, 0.75 is what the world is expecting now. If we come out with interest rates 0.75 on September 21st, get ready for a move back on up. Even though that's a very large interest rate, it's what's expected. And what's expected is what makes investors happy. If Jerome Powell states that we are raising interest rates a whole percentage point to really fight inflation, that's where we're going to see another drop on down. He stated at in Wyoming at Jackson Hole, he stated that we will use all the tools we can to bring down inflation. He was very stern, and he was very aggressive on his tone. And that's what led to the stock market dropping the first place from 420 all the way down to 405. So could he throw a curveball and throw a whole percentage point out there? Something that we haven't seen all the way since like World War II, I believe, where we actually was raising a whole percentage point at a time. So that would be something that we haven't seen in decades. That would lead towards a very hard drop. The S&P 500 still falling at this time. Let's take a look. FinViz, where are we at? We have the Dow at this moment, currently down 1,314 points, or 4.06%. The Nasdaq is down 644 points, or 5.2%. And the S&P 500 is down 182 points, or 4.4%. As I said, one of the craziest things to think about, if you want a different perspective out of this, is we call a correction when the stock market falls 10% from its high. 10% from its high. Sometimes this may take 2-3 months. In this case, it's fallen 4% in a day. That's wild to think about. Half of a correction is happening just on today alone. We take a look over on CNBC.com today. We could see the freak out that is happening. S&P 500 falls more than 4%, on track for the worst day of 2022. The worst day of the entire year so far. We are seeing at this moment, taking a look over on Tesla. What has Tesla done on the day so far? Tesla fallen from 307 down to 292. We can take a look over on Apple. Apple's been getting absolutely destroyed. Apple has dropped from 165 all the way down to 153. Huge red candle. We are seeing Google at this moment. Google taking a very big hit. Google's gone from 112 all the way down to 104, coming all the way down towards these bottoms. We are seeing at this moment NVDA. NVDA has been getting absolutely destroyed from the price of 147 all the way down to 131. I know everyone wants to nail these perfect bounces. And the S&P 500 is coming all the way down towards a brand new low of the day as we speak. And we need to ask ourselves a question. Well, Dick, is there any other way that we can see where the S&P 500 would bounce? And the other ways that we'd want to look is take a step back. Go to a different time frame here. Get rid of everything other than the 50-day moving average and the 200-day moving average. Turn off everything else. Because you know why? Those are going to be the most popular. So let's turn off everything else other than the 50-day moving average and the 200-day moving average. And what do we have here? Let's also turn off pre-market as well. We have pre-market off, post-market off. Awesome. S&P 500. What can we realize out of the S&P 500? We can see that we had a perfect bounce off that 200-day moving average back in 2018. We did fall a little bit underneath the 200-day moving average during the pandemic, and now if we come back down to the 200-day moving average, that would be at 356. Let's take even a little bit of a farther step back, and let's go to a monthly time frame. And the monthly time frame shows that this 50-day moving average has almost been perfect for about the last 7 years. And we can even, again, drag this back even more about the last decade, the last 10 years, where a perfect bounce was right off that 107 mark. And a perfect bounce happened in 16 at around 179. And a perfect bounce happened back in 2018 when we raised interest rates at 234. And we had a little bit more of a drop during the pandemic, but then we bounced off this 50-day moving average. And that 50-day moving average comes up to 352. So is 352 really the best bottom if you are, let's say, one of those one of those people that believes that the market is going to keep on falling? It's interesting to see that if we take a look at the monthly chart, the 50-day moving average is right around that 352 mark. And if we go to the daily chart, the 200-day moving average is right around that 356, 357 mark. So to me, if you're saying, okay, Deck, I believe the stock market's going to absolutely collapse another, again, $40. If you think we are going to go dropping, 350s is where you want to look. Mid 350s if you believe that the market's going to keep going lower and lower and lower. So the low we have gotten so far is 391.92. We are sitting right now at 392.46, and we are going to see where this market's going to be heading tomorrow. Now, again, a great point that was made is a lot of traders were asking, hey, what's going to be happening coming up tomorrow? And we can see the continuation of dropping in the markets. When we take a look at how this market has been reacting over the past, let's say, 9 months, whenever we've seen these huge drops have run in packs like wolves. We've had huge drop And as you guys can see, those huge drops have run in packs. We could see huge drop right here, and these huge drops have run in packs. Here's again a huge drop right here, and these huge drops have run in packs. And we could see again our huge drop right here, and it still looks like these huge drops are running in packs. So do we get these very nice climbs? Let's not forget about this. Let's throw out there that we have amazing climbs. 100%. Look how beautiful this is. Great climb, great climb, great climb. But when these drops start happening, they run in packs like a pack of wolves. And nothing stops them until they get fed. So we got the market right now still dropping. I am expecting a gap down tomorrow before we start getting any sort of bounce play. Stay ready for interest rates coming up on Wednesday, September 21st. That's the next big time we could be able to see a market bounce when we see Jerome Powell most likely raise interest rates by 0.75%.